All right, good morning, everybody, and welcome to the options trading pro trader webinar here with Tyler Wilson from OptionDrops. And let me make sure everything is working here in YouTube. I believe it is. Yeah. Okay. So, all right. Let me go through some slides here. Introduce you to Tyler. He's done a webinar with us before, pro trader webinar, but this one, and he trades a lot of options. So this one is focused, as you know, the pro trader webinar this whole week is focused on options, looking forward to. We had Brent yesterday. The recording is up. We have some really good options traders this week, so you guys should be able to learn quite a bit. Tomorrow, Jay Trader. Options Millionaire on Thursday, and then Doug Plus on Friday. Really nice lineup here. Today, Tyler, and let's get into it. So, Tyler's been investing for the last 5 years. He started in futures and crypto and then slowly moved towards equities. He has about 30K plus traders that follow him on YouTube, roughly 10K on Twitter, and he's also built a self-sustaining Discord community of 4,000. I do have some links here that I'll put into the chat if you guys are interested in more on Tyler. So you don't have to copy those down, but I do need to go through the disclosures and then we can get into the presentation. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so Tyler's looking for a video from yesterday's action. I don't know if you found it yet, Tyler, or need.
Yeah, actually, I'm gonna go over Friday,
Okay.
and then I'm gonna use that as an example of going into yesterday, and then kind of how I'm using CVD and
Oh, cool.
the hidden order book.
Okay. Excellent. Do you want to share your screen or project in Discord there, and then I'll re-share it for YouTube?
There you go.
Okay. Got it. And got it. Okay. All set.
Okay, so I actually want to do stuff a little bit different. So last time I actually went over specific equities and specific stocks. And when you're looking at it right now, it's more of, I would say, a bear market in comparison to the last time I was here. I believe the last time I was here was around February. So it was more of, you hadn't had that really big drop yet on the market. And so now you've definitely been forced to trade more ranges. And if you followed me on YouTube at all, then you know I'm always focused on indexes, right? So I wanted to give an example of what I'm looking at throughout the day and how I'm using Bookmap in tangent with everything I'm looking at. So when I come to the market, obviously the only indexes or charts you need to be looking at if you're going to follow along is going to be ES and NQ. These are the only ones that I'm ever really using, right? These are my bread and butter. If I don't like these charts, then I'm not going to move on to something like Tesla, Google, or whatever option I want to trade, right? And now some might call me a conservative trader, but the whole focus, like I said in my previous time here, was reducing risk at all cost in order to have the safest trades, right? I want to have the most ones possible, and I want to have my risk as minimum as possible. That's the whole goal of what I do here, right? And so what I want to use is actually Friday as an example. So this is actually the daily chart. I'm going to go into the 1 hour really quick. I'm actually going to bring up an indicator. It's just called opens, and it's just going to show you, each day. So we know, like this right here, this is Friday's action where you drop down and came back up. So we're actually just going to use this, and then we're going to be able to follow along right with this as well. So this is really the time we're going to focus on, and then we're going to go into today as well. And really what I was looking at. Hopefully next time too, I'm going to have more examples so I can go kind of like a whole week for you guys. But let's just dive right in. So I'm going to go, this is Friday's action, basically the entire day from market open here all the way through. And I did my best to screenshot the best action because I want to look at the middle of the day. And now when I'm using Bookmap, there's only really 2 indicators I'm using on here. I believe it's the hidden order book. I believe that's what it is, Bruce. I'm unfamiliar with all your names. Stops and icebergs.
Yeah.
And then I'm using CVD, which is your bottom red and green one, which should come which should come with it. So it's going to be your base indicator. All you got to do is go down to Bookmap. You can open it up right here. You come down here, and it's just going to be the drop box right here if you don't know how to use it. Maybe you do. So anyways, that's what I'm really using here. We're going to go through today as well, but I want to cover Friday specifically to what I was looking at. Now, when I'm trading, it's all based on price action, key levels, supply and demand, and volume. Volume is the ultimate indicator, and that's why Bookmap, in my opinion, is one of the only indicators worthwhile of if I had to purchase anything. That's why I like it so much. So when we come back to the chart, you're going to get a lot of action. Specifically, like I love to come back to TradingView or whatever chart you're using, doesn't really matter, and show you what's happening, because if you really look at Friday, you may not understand too much of what's happening here. If we come back into this day specifically, you may look at this and you might just say this is chop, and that's really what it was. It was a no trade time for myself personally. But you can see it was a lot of chop down. You were stuck in about a 30, right here locally, a 15-point range on looking at the ES, and you slightly broke it down, and ended there you got a pump. So you can see that it was really a terrible trading day. But when you use Bookmap in the way that I'm looking at it, it kind of can give you an idea of what to expect into the following day. And that's ultimately what I'm using it for right now, or to spot fake outs or continuation. So when we go back to that image, this is going to be from Friday again. So with CVD, it's a very important, and this is how I use it personally. So you can use it in any way you want. But some days you'll see CVD be in the green, but you may be, moving sideways. You may be kind of pushing down a little bit. And so you're going to get divergences there, as you will. But when you're getting chopped like this and CVD continues to move up, I use that as a very bearish signal for the next few days. It's going to be almost as, when you're looking at CVD, it's important to look at it as volume of buyers versus sellers, but you're not looking at the quantity of the order size. So for instance, if you look at someone that's buying a very large short position, that might not affect CVD in the same way as if there's let's say there's 10 total sellers, but there's one buyer, but the one buyer is buying more than the 10 sellers. CVD might still show a green look because the quantity of people buying is more than the sellers, right? So it's going to give you that look at it. And so that's the way I'm looking. So you can see as you're coming down here throughout the day, which is really from 9 a.m. and I'm in Central Time, so about 30 minutes after market open, through essentially lunchtime, you're coming down. You can still see CVD chopping sideways, right? And so when I'm looking at this, this is basically just setting me up for the next day, or however I'm looking to trade the market specifically. Because again, if you're familiar with me at all I'm doing is looking at indexes and then how I see them moving going into key events, and how I'm trading SPY, how I'm trading the NASDAQ Qs, whatever it may be, right? Specifically with options. So I'm trying to always give myself some sort of edge. So when we're looking here, we can obviously spot from the last video as well. We all know this would be a key support level that's holding in here at 38.50. It remained there all morning long. And we can see CVDs bouncing every time it even gets close to turning into the red, which is another major signal that you're going to need to watch. It's almost the number one time that I would not be trading or kind of day trading throughout the day is when you're getting the test of that flip from buying to predominantly selling, right? So you can see you're bouncing down here, you're bouncing. Every single time you're tapping it, you're bouncing back up. Now the price action is not bullish by any means, right? We can come back to this chart and you can see you are not bullish, right? We can all agree on that. Into lunchtime, you're making lower lows, right? We can all see what's happening here. All the way into lunch, you continue to make lower lows, and this is predominantly bearish price action as you're making these new lows, and then you start to make a high low out of lunch. So we can still see that. But for me, because of where we're at and we're not getting any dominant selling here, and we haven't broken through our key level, our key support here, that tells me this is most likely a no trade zone, and we just need to wait on this right now. Now, if we start to get below this level and then we start flipping over to the selling side, that's going to show me a day trade could set up for this. But it's important to realize that that did not happen. And then actually to the end of the day, as you move on, you can actually see CVD ended up popping up higher. And it's no coincidence when that happened. You can see what happened near the end of the day, coming back into this, as well as you actually ended up making your high of the day near here, testing your actual market open from the previous evening, which is around 5 p.m. Central, of when futures reopen on the market, right? So you actually see you test that, and that's where you ended the day there. So if we come back here again, you can see that this is all in tangent with that at that key level and that flip on CVD. And next time I'll try to have a PowerPoint for you guys as well, just so we can kind of like keep up with it as well and you don't get really lost here. But that's what I'm looking at here. And now going into Monday, I was going into this, and if you, again, what I was talking about this was based on this, and you can see here with that, the iceberg indicator, you can actually see that it was predominantly big orders coming in on shorts right here. They're getting stopped out of positions, betting on more downside for the upcoming week. And then if you actually combine this with any other tool of option flow or anything like that, you can actually see as well going into this that it was a lot of orders coming in for October 21st on the put side. So not only were you getting selling here on indexes near the end of the day when you were actually reaching your highs, right? Which coincidentally, if you come back here, you can actually see that this is a retest of your previous highs that you had made here. I mean, of your daily open, right? This was your daily open of the day. Guess where you top out at? Right there at that daily open. Once again, coming into Monday morning. So you see that happening right there with selling coming in. And then on top of that as well, if you go to any type of order flow follower that you may use, Unusual Wells, Cheddar Flow, any of those type of guys, or just on Twitter where they post all that for free, you can actually see that a large amount of orders are being established as well for the following month coming out, which we all know this week as well is going to be FOMC. The Fed minutes come out, very important day. For the market as well, which could be a really big trend changer, right? So as we move into today, right, so we can see that we're obviously holding this trend to the upside, and we can definitely see this is all green. And then yesterday, Monday, we actually had pure green action as well, which I talked about in my video yesterday. I just didn't get the chance to cover a screenshot of it. That's the only issue. I did not screenshot yesterday's video. And then as you come into today, as you're seeing all this selling pressure built up, specifically with that iceberg indicator you're seeing as well, as we come into today, you're seeing predominantly selling coming in now. You can actually see you have not even retested the buy side. You almost got a retest here. You can see that you quickly rejected. And as I said too earlier, this is almost the no trade zone when you get close to that flip, because you have to be respective of seller stepping back in or buyer stepping back in as you get close. And you can actually see here that you're making lower lows, you're following the trend, pushing down as well here, and you're coming into a lot of liquidity now. So the main focus of this is one, in my last one, I was going primarily over using just the levels and how to spot unusual activity coming into the book. Now I just want to talk about specifically CVD. CVD is one of the, I think it's probably my favorite indicator beyond anything, even on TradingView. It's become my new favorite indicator. And the way that Bookmap integrates it with their indexes in here, it respects it more than anything you're going to see on, for instance, TradingView. I don't like theirs. It's not going to be as respective, and it's not going to be as accurate in my opinion. So if you have Bookmap already, and which I assume you do if you're here, I recommend using this one at all points of the time, because it's going to really show you the way you're getting, especially with divergence as well, with spotting some of these, false breakouts and spotting some of the movement in between as well. So I want to make sure that's highlighted as well. I actually want to bring up the icebergs as well with that load in. But yeah, so that's what I'm looking at there. And this is specifically with indexes. I don't like to use CVD, and I don't like to use icebergs. You can't even use icebergs with equities, but I don't like to use CVD with equities because it's not going to be as accurate, and you're not going to get the same amount of volume that you're going to get into equities as you will with something like, for instance, futures. Futures are going to be a constant. You're going to get the best volume, constant in and out, and the biggest orders are going to come there compared to trading something even like Tesla or Apple. It's just not going to be as accurate. So I want everyone to know that, and I highly recommend not using it on those equities. That's just for me personally, because it's not going to work the same as I'm mentioning it here. So I want to make sure that's abundantly clear here. That's going to be the main focus. So when you're coming into this, I recommend charting futures. So like in Discord, and when I'm talking to anyone on my YouTube, I'm always breaking that down as well. We're always focused on where indexes are going and any type of edge that we can get into spotting the trend into the next day or the next week. That's what we're looking at. And then we'll move on from the data, and we'll treat the same data we got from indexes almost the same as to our equities as far as key levels and demand as well. So I want to make sure that's abundantly clear here as well. But so sometimes if you get rid of CVD, you can actually see here on the icebergs, you're getting some buying pressure here, right? And that's what I'm talking about with using CVD to identify maybe some fake signals towards the upside here, which icebergs are showing that there's buying occurring here, even though you're seeing predominant sellers here. And we can actually tell that the actual volume here is on the side of sellers as well. Like I said, CVD is going to be an indicator of quantity of buyers, not the size of those buyers, of how much they're actually buying or selling. So that's going to be a really big thing to notice there as well. That's why yesterday on such a low volume day, you were still so green. For instance, the overall volume on the market, specifically on SPY, has been around an average of 71 million. It's gone up from 63 to 71 million in about a week. But yesterday was a 71 million day, whereas Friday was 100 million, and then the day before that was a 90 million. So you're actually coming down right now in that volume as well. So again, you're going to notice a key pattern with the way that I'm using this is going to be as far as volume. That's going to be the number one thing, is you want to see volume, buyers and sellers, and any indication we can get into what big money is doing here. Because ultimately, that's why you're using Bookmap, is to see what the big money is doing here. And that's where you're going to get any type of edge here. Now we can see, obviously, there's a lot of liquidity here, but this is going to be a key area. You're getting buying coming into this liquidity. So it's important to know, but we still know here based on CVD that it's still pointing for more downside as long as we're still sitting in the red. And then on top of that, with all the signals that we were getting before, as far as the big selling orders coming in on Friday and yesterday as well, that we could see from the icebergs. And it's very important to know when you're looking at these icebergs that you're looking at the size of them, right? So we can see this is 360 lots. So we're going to know that this is not as large as, for instance, when we come back to Friday's action, and we can see that coming down here, you're getting over 1,500, right? You can see negative 1,500. So you're actually going beyond that at that point right there. So you can actually see the size of orders that you were getting on some of these massive moves were way larger than what you're getting on some of these short bursts of moves and then are quickly being rejected, right? That's very important to realize as well, because the biggest orders you're going to get typically are going to come on big spikes either to the opposite direction or while you're trending down. So that's where you're going to see icebergs typically step in as well, is they're going to be trying to buy the dip or short when you're getting to key levels as well, which is important to realize when you come back to TradingView and having your key levels marked out on your chart, which if you're not familiar with marking some of these levels on TradingView, I recommend using Bookmap as well to get you started there. I want that to be highlighted as well. So if you're not familiar with making key levels or finding resistances, Bookmap is definitely going to help you with spotting those levels, right? So we can see here as well, 386.5 to 3860. You can actually come in and see that this was a key area as well when we come to the 5-minute. You can see that all this level here on ES, guess what, guys? It's coming right back down to where all that resistance was. You can see this is where we were holding time and time and time again over the past 3-4 days, right? We can see that this was a key area, and it's coming right back into Bookmap because you'll be able to spot this based on the flow here. It's no coincidence that you're going to see the bottom of that level maintain there. And then as you get closer, more liquidity starts to dump into this area because they're trying to hold it as a key level. They're not wanting you to get below. And as you come into these key levels, it's important to know, as you're coming down, you're expecting buyers to step in, and as you're coming up, you're expecting obviously sellers to come in, because this is just how, support and resistance works in majority of your cases. Just think about if you're trading any type of chart, right? As you're coming up to that area, you're expecting, that's why you're getting out of your trade, you're expecting it to come back down, even if it's a slight rejection. That's always what you're expecting here, right? So when you're coming down to this area, you have to anticipate a bounce, even though your broad overall viewpoint may be bearish, right? So I have puts on the market, but I'm still holding these positions as we get here, because overall, on my broad scheme of looking at this, I expect this level not to hold. Now, if you're just scalping, day trading, this would be an area to where you're like, okay, I'm going to let this area subside. I'm going to see if we can get past this liquidity and start to move on. And if that happens, then obviously you're looking to re-enter on a retest of that area as well. But yeah, that's, for instance, that's a majority of what I want to cover here. I can break down specifics of that, Bruce. But that's the main part. Typically when I'm doing like the education stuff, it's me going back and forth with a lot of the students and going over parts that maybe I wasn't as clear on. If there's any parts you think I should maybe break down a little bit more, I would love to. Because it's for me, it's always, I feel like I can explain my train of thought, but sometimes there's key areas that I'm not able to dial in on as much that people may struggle with. So I want to make sure that if there's any areas that kind of went over too fast or didn't break down enough, that I can definitely hone in on more.
No, no, not. I mean, I do have some questions for you, or everyone, get your questions in for Tyler.
Yeah, I
There
would love
are
to answer questions.
there are some things in here, like this is you really painted a beautiful picture here in the bigger picture. What you're looking at, why you're looking at it, how you're getting indication from these areas in here, how you're reading the order flow in Bookmap, and then aligning that with the higher time frame. I mean, these are such simple things that we try to get across in our education all the time, and that's why we have traders like yourself in here to go over this and say, hey, look at the value this is bringing, is making you it's allowing you to create better decisions. And you're only talking about higher time frame stuff here. Some of the things that we had an options expert yesterday, Brent Kachuba at Spot Gamma, talking about all sorts of pretty high level stuff. He tried to simplify it as well, but it's pretty high level stuff. And now you're looking at it and the same things, same perspective, but you're looking at it from a different angle. But your higher level analysis was spot on with his direction as well. And then looking at the October, put calls, ratios, or where people are starting to now position themselves. And then I really like your use of CVD as well, like using it at kind of higher time frame level, and also divergences in a little different way that I really like. The question I have, like, you've covered the higher time frame. The question I have is now, where are you looking for options? How are you starting to look at your options trading in relationship to this?
So that's exactly what I was talking about in the beginning. Is when I came here last time, it was I believe it was early. It had to have been early. Was it February or March? It was maybe it was March, right before we had the big Ukraine thing happen and the market started just getting hit, right? So if we go back, I like to just use the chart here just so it gives everyone like a timeline example, right, of where you're at. And it's important to realize when you come in here of kind of how the market's moving, right? So you have some people that like you may follow on social media and stuff, and this is no way to say anyone's better than anyone, right? But it's to say that you have to be kind of um, paying attention to where you're at on the market, right? So we go back to March, right? Early March, about right. I believe we were like bouncing right here. This is where we were. So in the grand scheme of things, looking at the S&P 500, right? You were still relatively close. You're about 10% off from all-time highs, right? So at that point, it was just a minor pullback, and now we're definitely getting hit a bit more, about 20% from all-time, no, 25% give or take from all-time highs. But you're definitely hurting more here. So for myself and a lot of traders that I know personally, it's all about adjusting your strategy. And like that was something that I was mentioning heavily in the first one. And I know a lot of people weren't here probably for that first lesson. But somewhere it's saved, so y'all can go over that. I know Bruce has it saved on the YouTube page. But we were doing a lot of equity looks and looking at like something like Lucid and mid caps. We're looking at a lot of mid caps for making those decisions here. And as of lately, I have not been liking straight options on something like, Google, Nvidia, Amazon, Tesla. As far as going back to here, before we had this big break, below this major level, I was very active in those equities. As of lately, the past 2 weeks since we rebroke down below here, I've been playing more of the swings as far as SPY. But where it lines up with that is more of entries. So the way I'm using Bookmap here is more for finding entries and combining it with everything else that I'm using. Because no matter what anyone says, and I think Bruce will agree, using Bookmap is not going to be your key level to know everything about the stock market and when to get in and when to get out, right? It's just going to help you and refine you more, right? And that's when me and Bruce first started talking, before I even came a part of the team and stuff and started talking to them. He was like, it's important that we're transparent and showing you that you're not going to use Bookmap and use one indicator and you're going to be a profitable trader, right? You're not just going to. It takes work, and you have to and that's why there's some people that come in here and that are able to twist it and use it to how they trade specifically, right? Like he mentioned the guy trading with the spot gamma, and I've looked at that tool yet, and I just haven't figured out how to combine it with my method, even though all I trade is options, right? And so it's going to be different for everyone. But the way that I'm using ES and using the N, I don't really like using NQ futures here just because ES is just the most clear in my opinion. I think me and Bruce also talked about that. ES is going to be just the most clear and give you the best picture, in my opinion, when it comes to looking at any type of true movement on the market and being able to use this chart to predict anything else. But where I'm using it for options specifically, right? I like to try to spot weakness in the market. For instance, right? Like I just said, yesterday was a very mediocre volume day. So if we're moving, for instance, if we're moving down, right, and we're moving up, let's say we're moving up, but the volume on the day is very lackluster. So we can come back actually into yesterday's movement, right? I want to highlight yesterday's movement because it was such a good day, and I cannot believe I did not take a picture of yesterday's book map. But if you come back into yesterday's movement, right, we're going to come in here really quick, and you can actually see, yes, on a 5-minute time frame, it looks like you get a great move. It really does. So from market open about right here, this marks your market open where day starts until the end of the day, roughly about 3 o'clock is when the market opens. We'll say right here when after hours close, right there. Get a great movement. 38.60 to around 39.20, about a 60-point move. Now, in consideration, when you're having big moves on ES, NASDAQ, or anything else, throughout the day, you've been moving a little bit better, right? For instance, we moved from our big drop from 4,200 all the way down to 39. It's over a 100-point move, consolidation, and then we moved from 39.70 down to 39 flat, proceeded to dump even further, right? Just continuous, right? So we got some steady upward movement here, but the key thing to realize is back there, we're moving with a lot of volume. So when you start to see a big shift in volume, whether it be from high volume to low volume, that's where Bookmap is going to give you your answer, in my opinion. So when we come back over here, like I mentioned with yesterday, again, sorry, did not take that screenshot, but if you were looking at Bookmap on ES yesterday, you would notice that the entire trend was green. You were just pushing up with CVD. And so what I'm using this as is I'm using it as divergence, and I'm looking at it from a lens of if you're getting minimal selling pressure and you're only getting buying pressure on the market, right? You need to be able to establish and realize what's happening. So if you're getting minimal volume, your lowest volume in most likely the past 10 days on the market yesterday, and you have to recognize that with it being that low, looking at the book and looking at what's happened, there was no real resistance towards the upside here on Bookmap. Now, when you look at that, it'll tell you a few things. In my opinion, it told me that buyers on the book yesterday were extremely, extremely weak. And what I'm looking for, whether it be any type, specifically with breakouts, but with any type of market, you're looking for strength and follow through, right? So if we go back to the chart, and I like to use this chart, and I know Bruce might get mad that I go back and forth so much, but as we're looking, the biggest thing here when we go about the 4-hour chart is look at the indecision over the past few days, right? It's back and forth, back and forth, back and forth. You're not getting follow through volume, right? So for instance, if we go back to around the 13th, I believe this was the beginning of last week, roughly, you'll actually be able to tell that this was just, you were sitting in about a 30-40 point range. And if you go back and we were looking at this, you would be able to see the weakness in the market and the lack of follow through, right? And I like to tell everyone too, when we're talking about on YouTube or anything, I'm very clear in telling people that there's no secret formula that I'm using. I give an example of everything I'm using here. Like it's usually Bookmap. It's going to be a little bit of options flow, which is not that imperative, but on key dates, you're going to be able to see when big volume starts to flow in. But you're going to be able to tell when the market starts to pivot based on strength in which you're seeing from Bookmap. And now Bookmap's not going to give you a clear answer and say, well, right here, that buyers are weak, right? So if we look here, I just want to let you guys really look at what's happening, right? You can see that one, you're trending down still. We can obviously see on the day since market open, I was just in Discord talking to you guys, but as you're seeing, you're trending down, but guess what happens? You're actually trending up on your CVD. So what does that tell you? That buyers may be trying to push you back up, or more quantity of buyers might be stepping into the market. But guess what? They're nowhere near as strong as the bears right now, because even you're still trending down with ascending CVD, ascending buying coming in as far as numbers of buyers, right? So we can spot that here, right? It's just a clear downtrend, but your CVD is diverging against that. So right here, that's why I was able to start entering my position yesterday, and I started just loading into puts for October for myself personally. And those puts are doing well. They're doing okay. But like as we're looking at this, this is this confirmation of what we're looking at. Because ultimately, when you're getting in and out in a trade and out of a trade, your ultimate thing you're looking for is confirmation to make sure you're making the right decision. Or again, like I said in the beginning, reducing risk as much as possible. I hope this right here gives you an example, but this is like one of the best. I love watching the divergence that you can see on Bookmap with CVD especially. Sometimes you're going to have to take off, your icebergs, and I don't recommend, relying on anything that much. Even CVD, don't rely on CVD as a whole. But for instance, I know a lot of guys that use Bookmap and icebergs are their favorite, or people in Discord like, hey, Tyler, are we getting any icebergs? We're getting any buy pressure. And I'm always telling them, I'm like, well, you may be getting some, like right now, you're seeing predominantly buying pressure kicking in, right? Predominantly all across the board, buying. But guess what? You're pushing down, right? You're in a downward trend. What does that tell you? Does that mean that the icebergs are irrelevant all the time? No. But what you have to look at is the size of these orders, right? So we can tell that the size of these orders are a lot smaller. Even the buying pressure you're getting right now on this dip, right? Like I just said, you're going to get buying pressure when you dip most of the time. And you're getting that right here about to 400 lots. It's not that it's bad. It's that it's nothing compared to what was happening on Friday and yesterday, which was happening at, 4 times the size of what you're seeing right now, right? And so you have to be able to compare, contrast of buyers versus sellers, and you really start paying attention, right? So I can't just come into Bookmap and just say, okay, well, 5 minutes I spent here and I got my answer, right? You have to like really start to, break down the data of what you're getting each day, specifically with what you're looking for. Does that make sense, Bruce, and how I explain that? I want to make sure.
Absolutely, absolutely. And no worries. Whatever tools you use is what to go over and cover. This is about how you trade and also use Bookmap. It's your show.
I just want to make sure that I'm explaining it in a way that's easy to understand and that I'm not losing. I have to make sure, just because from personal experiences with teaching anyone and going over things, I know sometimes people can get lost, especially I tend to go on a bit of a rant here. So I just like to make sure that it's, kind of step by step. And if anyone has questions as well, I would love to answer anyone's specific questions about what I'm using and how I'm looking at this. If part of this doesn't make sense, because chances are too, like I tell everyone on YouTube and on Discord, chances are there's 10 other people that have the same questions you have, and they're just not asking as well. So any question, there's no real dumb. The only dumb question is when you ask the same question over and over and over, and you don't ask for someone to break it down a little bit different. But yeah, I really encourage people to ask questions. Even if it's not me in here, you should be asking people questions. One, to make sure they know what they're talking about and see if they're just not spitting out random stuff. But also, too, so you can get it broken down to make sure you're understanding what's being said. Because ultimately, I'm here to hopefully break this down to a better way for you guys to go to use Bookmap and to understand just the way that I'm looking at it.
Yeah, in fact, no, thanks for that, Tyler. The question here I was just about to ask, but Motion Vista already asked it here. So how do you choose your puts in October?
Okay, so you're not going to get like that type of answer from Bookmap, in my opinion, because it's not going to, you can't look at this and be like, okay, well, I'm going to buy an option. First of all, you don't have options on ES. You have to go more to SPY. When I'm looking at puts specifically, I love using Thinkorswim for looking at the book. It's just a really simple and easy way to use it. But I use a different broker. I don't use Thinkorswim as a broker or TD Ameritrade, but I'm looking at open interest and volume. For instance, if we go back to something like Cheddar Flow or anything like this, right? I don't recommend using Cheddar Flow by any means. I'm not like I just use them just to see where big contracts are coming in. To kind of notify me. There's better ones out there. So again, there's no real specific niche to this. But I just want to use this as an example of looking at key contracts. So you can, like I said, this is just today, for instance, right? The biggest orders are all towards the downside so far today. So you can go look at every day, but anyone will be able to tell you there's cheaper options. There's a ton of them. I recommend doing your research on anything before you buy, because nothing's gonna make you a great trader, right? But what I'm looking at is going to be heavily open interest and volume coming in on contracts. So we can see, like I've been telling everyone for the past few days and weeks, that what I'm looking at is, and if you heard of this OPEX talk, I'm sure everyone here has heard about it, right? So we're seeing, you just saw on NASDAQ a few days ago, right? And this is going somewhere. Just stay with me. You saw on NASDAQ a few days ago, or was it? You saw a little gap. So right here, this time right here, this is where futures contracts rolled over. And Bruce, you'll notice I did not send you a message asking you the new ticker this time. I found it on my own this time. But so when this happened, futures rolled over. And if you notice on Bookmap, you had to change your ticker from ESU to ESZ this time, right? That just means futures rolled over. Now, you didn't get a gap up in the market or anything like that. It was just contracts rolling over to the new dated contract, and they kind of got the numbers messed up a little bit. Then they ended up recalibrating them over the next few days, because there were still contracts on the last one and going into this one, right? And so, but the point I'm making here is that you had September, I believe it was what was last Friday? Yeah, 16th. It was your OPEX day. It was your big day for contracts, right? And everyone was saying that this is the end of Q3 fiscal year. This is the big time, and this is when you're going to see a big movement. Chances are, if you looked at last Friday, you didn't really see any movement, right? You didn't see anything. This was actually your movement here on Friday. It was terrible. This is what we talked about. So this was your big day that all the traders were talking about. But it was really easy to see if you went and looked at the actual book and the flow, because you can actually see this on any broker. It's free. You just go to your contracts and go over the date, and you can look at open interest. And open interest is going to show you the amount of contracts that have been sitting there on those contracts. On those specific days, right? So on strikes. So for instance, I believe there's 100,000 at 380, another 100,000 sitting at 375, and then there's more sitting at 365 as well, right? They're stacking up and up and up right now. But you can tell by looking here and looking at contracts, and this is just going to give you a quick visual, but you're actually going to be able to see that, in my opinion, you're seeing most of these contracts, you're seeing some smaller orders coming in, right? They're coming in for October, for December, November. But where you're seeing the biggest amount of orders flow in, and this is my opinion based on the numbers that I'm reading on the chart, is you're seeing a majority of those coming in for October 21st. And so this is going to be different for every stock, every ticker, everything like that. But ultimately, you want to see open interest and volume for your ticker, right? I don't want to trade a very illiquid stock, for instance. And we'll go into that here in a second. But if I'm looking at, for instance, SPY, you're able to see that, one, you're saying that this is all October. And then two, these are your biggest orders. So I like to adjust this based on premium size. You can do this again on your broker as well, whoever you use. But yeah, I use Interactive Brokers, just so everyone knows. And I believe Bookmap is in the works with doing something with them. I may be wrong, but that's going to be coming out later. But as you can see here, these are your biggest orders, right? I like to adjust them. So today, for instance, your biggest order is 8.3 million. That was for September. But beyond that, you're seeing a majority of these very big sell orders are coming in for October. That was a buy for that's for a year out, irrelevant right now. But you can see all these major, I would say out of the top 10, 2 of them were not for October 21st. So that tells me, in my opinion, if I'm looking for downside, and if I'm looking to trade, again, the market towards that downside, I'm going to be looking at those October contracts, because those have the most volume, and that's where big money is going. Like I said, I always like to follow big money. And again, if you're using Bookmap, I assume you like to follow big money, because that's what the Bookmap's for. So you can see what's really happening here on the market. You can spot the key levels, where the demand is, and how ultimately the market's moving. So hope that made it helped you out with a little bit with picking out those options, looking at those. And it works the same way with equities as far as Tesla, Apple, those. But you're going to see less volume, right? You're not going to see, orders like this coming in all day long, because it's just not going to happen usually. So you got to be able to spot that. But something like when I'm looking at swings, for instance, a longer data position, I want to focus heavily where big money's at. That was a good question. Is there a spot where there's a question? I did not even see that question.
That was on YouTube.
Okay.
Yeah, that was it. That's been it so far, which is kind of surprising. Yeah, interesting stuff. So, okay, I mean, I love it, Tyler. I mean, just really, really simple, straightforward stuff. and you know exactly what you're looking for those upticks in the open interest, and then positioning yourself.
Yeah, and again, I like to keep everything extremely simple when it comes to the chart. That's why when you come to look at my chart, for instance, and again, this is in no way telling you you're wrong if you use, MACD and RSI. I'm not condemning you. Go for it. I encourage people, test things out. Make sure you need to find out what works for you. There's over 800 members in our Discord, and I would say maybe 5 of them trade the same, right? It's just about simplifying what you're using and kind of picking out what doesn't work. But you're going to notice on my chart, I use essentially nothing. I use one indicator to really map things out for me, and just, it's like a cheat sheet, the opens one. But besides that, all I'm really using is, one EMA line and then VWAP. I keep it very simple. I personally am a believer of the more stuff you add, the more room for error you're going to have on your chart. It's just going to cloud your judgment, and I like to keep things extremely simple, very to the point as far as where buyers are showing up and where sellers are showing up. Everything else is a little bit, up in the air, right? Because I want to keep and that's why I use Bookmap, is because it's so focused on the foundation of my trading, which is buyers and sellers and volume, the end, right? That's why it's so important. And when you're using some of these other indicators as far as MACD and RSI and, I'm trying to think, Bollinger Bands or whatever you may be using, right? Those aren't focused on volume. And I just want people to think about it from a rational point of view and non-biased, is how can you judge the way something's going to move, specifically the stock market, if you aren't factoring in the volume behind those moves, right? So if I'm coming to a chart and I'm just looking, right? Let's just say we're just looking at this, but you're not looking at the actual volume. So if you're looking at this and we can notice on Bookmap that volume's actually descending, right? Then what does that tell us? That tells us that this is setting up for another drop, right? So it's important to realize some of these things and to, make sure your trading's all aligned with each other. So if I was using, based on volume and using Bookmap, but then I was just throwing a random indicator in here and I was like, oh, well, this is going to, determine whether I get in and out of a trade. You can see how that would cloud the direction of my whole thesis on trading, right? Because I'm using everything based on volume, buyers and sellers, and supply and demand based on who's buying, who's selling, and the strength of those people selling and buying. But then I'm just throwing in a random indicator that's only basing it off the candlesticks. Because there's a really big difference between a candlestick and the buying power behind that candlestick. Because you need to realize that you do not need extensive volume to push you up. The market does not have to have crazy volume to move in an upward direction. You have to realize that. You do not need it. That's why yesterday, again, was a very minimum volume day in consideration, but we still got an upward move, right? So when you get really strong volume and you move up, that's when you can be like, okay, this is a really powerful move, right? Now, that's not to say that any move on the upside with no volume is irrelevant, because it's not, but you have to be able to identify whether it's a consolidation phase and things like that. And that's ultimately how I use Bookmap and how I'm going about this trading method.
Yeah, crystal clear. I love it. I mean, I really have no questions for you. It's very clear. The only question, so you did kind of elaborate a bit on, okay, now I'm looking at, the open interest in some of these options, and and then that's basically it, and just kind of jumping in, or are you kind of working the order?
So
Or
So if I'm looking at specific stocks, I'll go a little more into this. So obviously, when I'm looking at ES, if I'm looking at ES and I want to trade based on ES and that's it, then obviously I'm just going to trade SPY. And if I'm looking at NASDAQ, then I'm going to look at QQQ, right? Those are just bread and butter, makes perfect sense. But if I'm looking at stocks or equities, something that I'm heavily telling people in all my videos and, in Discord, Twitter, YouTube, doesn't matter, right? I'm always telling them, you don't want to bet against the strongest stocks, right? So like, let's look at Tesla over the past, this is a daily chart, right? So over the past, basically, since September 6th, 14 days or 10 trading days, you've been making higher lows continuously. So this is something that I would not want to bet against right now. Even though you're at a major level, even though Bookmap, I can guarantee if you go over to Tesla, it's going to show you a big giant sell wall up here. I don't want to bet against it. And why don't I want to bet against it? Because it's performed so well, right? It's very important to know here. Now, if I go into something like Meta, for instance, Facebook, guess what? Over the past 10 days, this one's gone straight down. So as I'm looking here, I'm going to go into Bookmap and I might say, look, okay, ES, it's lining up. I think we might get rejected here. I can go into Bookmap as well, and it'll be able to actually spot. You can actually come in here. You're going to go, I believe it's DX feed. You'll go to Meta, and it'll pop up. Sec, load in real quick. But it's going to be able to actually show you, like I said, too, if you're not very good at spotting these levels to watch for, Bookmap will help you do that very easily, because this is going to come in there really quick. You actually see, get a zoom out. You can start to see where that liquidity is again. So for instance, like I said, I want to, if I'm betting against the market, I want to bet on stocks that are already weak or stocks in the same sector of something that's already weak. So if I'm looking at Meta, I'm going to look at social media stocks, Pinterest, Snapchat, things like that in that same sector. And I'm looking at these levels. So 149, 149.5, 150. You can see the size of those lots as well. We can see 149.5 is the biggest so far. And we can go back in here and we can actually look as well coming back in 149.5. And guess what? You can actually see that's where that low was made, right? So we have the low here, but that's where a bulk of that volume actually ended up closing on September 15th before you ended up gapping down so terribly down to 148 the next day. And then eventually that same day coming down to 144. So we can see that's a key level right there. We can already see that it's a major level. I didn't know, I didn't plan this beforehand. This is me just literally showing you how I'm looking at these from here and how Bookmap is going to be able to literally show you along the way as well. So you can come into like the 15-minute chart and look more at this. And look, this is that same level, guys. I'm not making it up. This is, I can't make this up. You can see that this is that 149.5 and that sellers are still putting a giant wall there where you were holding before. You can see you bounced 1, 2, 3, 4, 5, came through and got rejected 6. So there were 6 major touches of this range here, right? That's in a 1-day period. Or no, that's going to be in about two days roughly. Almost like a 2-3 day period right here. So we can see that's a major level and it's still being respected here. And how did I find that? All I did was come in here. One, I looked at which stocks were the weakest in the market, and I already know because I'm looking at these basically 24/7. Then I come into Bookmap and I come in here and then I'm looking at where these are. So I'm looking at the biggest sell wall. You can see it's obviously 149.5. Your next one will be about 150. And if that makes you feel a little bit better, you can actually just do a zone, like a supply and demand zone, and bring that up a little bit higher to this 150 range about right there. And that's what I would do personally. So I'd have stops above this range and then be looking for options towards the downside. Now, if I'm looking at options, what am I doing? I'm looking at one, a date that I'm comfortable with. And this is where it comes back down to being very comfortable with your positions as well as far as options is you're looking at one, how far out do you want to go? Right? And so when I'm looking at SPY, I'm looking at big amounts of volume and I'm willing to swing that position. But if you were looking to, day trade or scalp based on these touches, for instance, you're looking for a quick touch and then a rejection, for maybe $1 or $2, that's more of a scalp. So you can look for 1 to 2 weeks out to make more money or more percent on that position as quick as possible, right? So it's going to all depend on specifically where you're looking, right? Those are big things to focus on as well. And again, that information is going to be totally free on your broker. So you don't even need to pay for anything like Cheddar Flow. All you got to do is go to your broker, pull up the options chain, and then the open interest and volume is all you have to look at. And I actually have a video of that on, I believe, my YouTube as well, going over that. So all that stuff is really simple to break down as well. That's a very important factor to know. But I literally just showed you how you can use Bookmap, even if you're very bad at charting, even if you're like, I have no idea what's going on here, I don't know what to expect. Bookmap is actually going to draw that out for you. And that's why it's such a good tool as well if you are a beginner, because it's literally color coded for you as well. And when you come to some of these equities, like I said, you see how much less, walls there are here as far as going into indexes. We come to ES futures, S&P 500 futures. Look how many levels there are. It's like there's so much more volume, so much more going on. Going back into Meta, a lot less, right? So that's why I'm always focused on futures, getting my direction from those futures, and then I move on to equities if I want to trade at equities specifically. that was how, hopefully that was a much better breakdown of looking at those options as well, Bruce.
Yeah, yeah, absolutely. I want to dive a little deeper. So pardon my questions, but like, um, so that's great to hear. So you're looking at the relative strength between the correlations between the markets and the stocks and what to trade, and then it appears like your setup is more or less, or your holding time depends on your time frame in the setup. So you might be holding for some weeks due to a kind of a higher time frame setup, or maybe you see a smaller time frame setups and you only hold for a day or two or something like that.
Exactly, exactly. Like that's what I'm saying. People, a lot of people ask too. They're like, "Well, are you looking to trade more daily? Are they day trades? Are they swings?" I'm like, it's just what the market gives us, right? So, for instance, just what I was looking at the market yesterday, a big thing that I was pointing out was this level here on SPY, right? So SPY, we know our previous lows from September 6th, we broke down obviously, to start, or I believe on Friday, you gap down, right? And then you bounce back up. So this was our previous low right here around 388. It's important to realize that you touched that at the end of the day yesterday, and you got that's where you were. And then what happened today as the market opened? You gap down nearly $3 and then end up coming down to 383 roughly, right? So it's important to realize that, and this is, you can come back to a daily time frame, you can come back to whatever time frame you want. And obviously the larger the time frame as far as the daily and weekly, the more respected it's going to be, but also too the more opportunity you're going to have to either swing and hold that position longer. If you can hold a position longer for a swing, traditionally, if it goes more of the direction you want, so hypothetically, if you were to get the rejection here and have a clear break of the next, support level, obviously be able to make more money holding that position since I have time on that contract, right? So it's all going to be dependent on your time frames and what you're looking at. Now, I have people like that I'm trading with daily, and I might take one trade a day, and they might take 10, right? Based on what they're looking at. They might be at the 1 minute chart going back and forth, back and forth. Now, I just don't want to put myself through that mental stress all day going back and forth. I have no interest in that personally. I would rather just have a smaller quantity of trades with a very high quality as far as low risk, maybe 10, 12%, and my, profit potential being 40 to 50%, in a perfect ideal world, right? So I want to highlight that. But there's no real formula for having, for knowing specifically of, okay, this, every setup is going to be a day trade, right? It's all about giving what the market's, giving you, or taking what the market's giving you, right? So again, that's why I come back to, this time when I was in here, the last time we had our last lesson was back in, beginning of March, right? And you can see the market has greatly changed since then, right? It's clearly on a downtrend. We can all agree that right now, right? A lot of big things happening in the market, specifically with inflation, right? And so we have to adjust the way that we're trading. Now, if we go back to, last year, things were a lot different. It was the opposite of what we're looking now. It was, you could hold a trade for a month and 9 out of 10 times you'd make money, right? Whereas this year, if you hold a trade to the downside 9 out of 10 times, you'll probably end up making money unless you catch it on one of those little relief bounces. And that's just the way the market's been treating us and what the market's been giving us because of what's happening within our economy right now. So it's important to be able to realize, the overall scale of the market. And I know this part might be a little bit more confusing for people of how to know when you're really shifting back to a bull market and from a bear market. I can't give you the answer on that. I can't tell you when we're going to change back. All I can do is react to the way and what the market's giving us, right? That's the really important thing to know, is that how I'm trading and how I'm using Bookmap is all reactionary. So I'm trading based on what I'm being given every day. That's it, the end. I'm not using any secret formulas. I'm not reading any special papers. I'm not, I don't have any information about what the Fed's going to say tomorrow, for instance. Some people think that there's just this crazy stuff, and unfortunately people lie to people on the internet. Who would have thought? But, I'm just using this information as I get it, right? And as we come in here, and it's all based around the foundation of what Bookmap is. It's buyers, sellers, volume, the end. That's really what it is here. And there's some tools that even I don't use here that I could probably take advantage of, but I love the way that I'm trading based on what I'm using right now with Bookmap, right? Based on CVD and icebergs. And like I said, sometimes throwing in too much will just, throw you off of, what's working for you. So I think it's a really important way to find a medium of what works for you and making sure you hone in on that, right? So if something's working for you, I recommend getting a hammer and bashing that and just keep hitting the nail on that, because that's going to be the part that's going to take your trading to the next level. It's really focusing on what's working and then refining that as much as possible, right? And that's ultimately what I'm saying here is how I'm finding these levels here and how I'm dictating whether it's a scalp, swing, or anything like that, right? And Bookmap's ultimately going to be able to give me a good indication too of if we start bouncing, it's going to start showing me, do buyers have real strength as well, right? That's going to be another really big point there.
Yeah, no, really, really great, really clear, Tyler. Just a question on some of the options, like and we're talking more about the kind of position and execution. Are you looking at vertical spreads? Are you looking at just puts or calls, or are you selling puts and calls, or like any sort of and no secret formula we're looking for, but just like kind of in general, what are you looking at in trading? Hello? Did I lose you? I think we lost you, Tyler.
Oh, sorry, my mic was muted. I was coughing. I muted it. So right now during this market, it's been heavily in favor to the naked options, and I know this is not a recommended approach, especially if you're a new trader. I think it's a terrible approach for a new trader. You should be taking advantage of spreads and strangles and things like that. And as far as commodities and the commodity section, I think strangles are your best bet right now because you can make so much money in commodities and oil stocks, energy, gas. But it's definitely knowing what your market's doing right now. And I was actually, and I did this from roughly, I believe it was March into June. And I was basically doing a small account, tinkering with it and trading live with it in Discord. And then every day I would do a recap on YouTube as well. And we were able to take that, from 5 all the way to about 15. And then I just stopped it. I didn't want to do it anymore. But it was heavily just in favor of trading the trend and getting, key levels in here on the breakdown. If you're able to ride some of these puts down, then it's awesome. But if I'm looking at different type of options right now, the only type of way I'm looking to sell options or to do some of that as far as we're looking at the market, it would be more my longer term positions. So if I'm looking to, like right now, for instance, my favorite stock to buy long term, it's my favorite beyond anything else, just the way I think their company's going to move, it's going to be Google. It's my favorite stock that there is right now. I think it might drop a little bit more, but I don't care. I'll be buying Google till the depths. I do not care. I will be buying Google nonstop. Favorite company, whatever. But let's say you're trading Apple. You like Apple long term. It's the great stock. It basically recovered almost back to all-time highs. So you could argue that it most likely is a better stock than Google, right? Google only came back to 122 in comparative to Apple going almost back to 146 in comparison, right? But if I'm looking here, then I would be willing to sell calls on some of these positions, shorter dated. I would be willing to do that. Just because looking at the scheme of the market, one, I don't want to lose my position. I don't want to have to give out my Google shares. One, so I would want to do more shorter dated positions, where I would make probably less on those contracts. But if that's something that you want to do, that's what I'd be looking at there. That's not financial advice, obviously, but that's what I'd be looking to do there. As far as some of the spreads and stuff, I just don't feel the need to, just because of what's been working again for me. Now again, there's people again, like that's why I'm so big on talking about like community and stuff. And as far as in here, I'm sure there's people in here that, there's probably 20 different trading strategies just in the Bookmap community, right? There's probably 50, honestly. There's so many different strategies, right? What people use and combine and how they're tinkering and how they're trading. And so you have to, I'm okay with that. Like in our community, I'm totally okay. And I encourage different trading styles. And I'm always open to being wrong and with what I'm looking at. But with what's worked for me, that's just how I've been trading. And then basically I just take a majority of my profits and just dump it into my long-term positions. And that's just how I've been looking at the market specifically. And that's not to say that any of those spreads or anything are bad, and they're probably going to reduce your risk even more. But like I said, I've been taking a lot less trades recently, but I've had a lot tighter stops as far as reducing the amount that I'm risking, right? So again, first thing I said when I hopped in here was the goal of my trading is to reduce risk as much as possible and create as much reward potential as possible, right? Very, very clear on that when we're looking here. It's like with SPY, for instance. I want to just give an example of what I was looking at here. So on we'll go to the 1 hour chart, right? So I started entering and started establishing my position once you rejected at this level. I started establishing in it, and then you bounced through it, and I was okay with that. And I told everyone, I was like, look, you might bounce. It's okay. Like if I'm entering this position, but I do expect somewhat of a bounce. And if you bounce, my next level is around 388, that previous low. And so I ended up adding more positions near the end of the day. And then you open up and we're up 20% of that position overall from averaging down as well. So it's all about what works for you and your time frame specifically. Now, if you're not able to like swing, and some people are not able to swing, I've seen all types of traders. They just do not have the mental capacity to watch a trade get down potentially, 10, 12%. And not get out of the position. And that's okay. But you just got to know what works for you and, ultimately how you're trading going into the market. But yeah, so like going from the last time I was here, Bruce, I was trading a lot of quick in and outs on the market just because I was unsure of the direction that we were going in. And if you look back here, when I got in here from basically the beginning of March, you ended up dropping down to lows of 415 on SPY, then bouncing all the way back to 463, right? So look at that, just the crazy volatility here, right? There's so much back and forth. So it's going to be harder to pick a direction here than obviously you ended up coming back down and breaking the overall trend. So that's just my viewpoint of how I'm looking at the market. And I know that's not a direct answer into maybe what you're looking of,
No, it is.
how exactly I'm coming up.
No, it is.
Yeah.
I mean, you're keeping it super, super simple. I mean, like what works for you, and just go with it. The simplicity is there all throughout your whole process. You know exactly what you're looking for, and then just getting aggressive and going in and doing it.
Yeah. Again, I try to keep it as simple as possible. I never know if I'm relaying it in that simple process in which I understand it. And I understand that some people might be beginners and they might need a little bit more of an explanation, but I always try to give as much as possible when they're asking those questions.
No, it's really funny. I mean, we just see that throughout, professional traders that come in and do some of these webinars with us. The simplicity is one of the things that is just across the board. Is something they all share in common. They know exactly what they're looking for.
Yeah, and I when it comes to anyone trading or whatever you're doing, like it doesn't matter. Sports, trading, whatever it may be. Whenever you're getting into whatever you're going to do, you have to have confidence ultimately in your trade, right? Because like I said too, some people can't do swings or they can't handle them because sometimes in swings you might get down 20%. I wonder if you're in your position size usually on swings are larger, obviously. So when you're looking at that, I really think it's important to have confidence in what you're doing and not relying on a bunch of outside or in this case a lot of indicators, right? You need to be very confident in what you're looking at, but also having a plan. And that's why, again, like when it comes to everything I'm looking at, there's a clear plan, there's a clear level where everything gets invalidated, and that's why I love looking at it from a volume buyer and seller perspective, right? There's no you always hear when you're looking at social media and YouTube, and a lot of people here probably are on social media and YouTube reading and researching stocks, or whether it be from news articles, and there's always a lot of like maybe conspiracy theories about what's happening, and they believe people are holding the market down or pumping it back up. I see it in comments on my video all day, on my videos every single day, and I want to highlight that you have to focus on what you can control and what you can look at every day. You can't trade based on things that you think are going to happen. You have to trade based on what you're seeing happening, right? And again, that's why I love the product, and that's why this is how I trade based on it. You know what I mean? It's all based on what I can see and what I can view the market is doing and has done before. The end. There's no looking down the road of comparing this to 2008. You're going to see a lot of those comparisons lately. But there's none of that here. It's all just looking at the market, what it's giving us, looking at volume, looking at where buyers are ultimately showing up, and looking where they're not showing up, and then the same for sellers. The end. That's all that happens. If you're wrong, you're wrong. As long as your overall strategy is working, majority of the time when it comes to win and loss and P&L, as far as risk and reward, then you're good. But if obviously you're wrong, 7 out of 7 times, you got to be concerned at that point. But for me, again, as long as it's working, if it don't try to fix it. If your strategy is working in the long run of things, only thing you can do is try to refine it and control risk even more. That's the only thing that I would say for there.
Yeah. No, I mean, just yeah, really like it, Tyler. Just the clarity and simplicity here. And if it ain't broke, don't fix it. Uh, one question here, and then we can wrap it up. But I was just answering Russ about the pros and cons on options compared to futures. But I thought I'd throw it to you and see what you say.
So this, in my opinion, the biggest thing from options and compared to there's two things actually. One is going to be risk. Obviously, that's the big thing. When you go into an option, you're only risking what you put into that option, obviously, right? And then you can get out your option whenever you want. You can take the loss at 10%, 12%, whatever it may be. You can do the same thing with futures. You can get in and out of the position if you want. However, the big thing with futures is, one, you could get stuck in your position, possibly if you have like a stop limit, for instance. I know a lot of people do that. I've heard horror stories in my community, for instance, of people getting into futures. They're not super aware of it. And when you're getting into that, if you're knowledgeable, then you're fine. But if, for instance, you've seen massive drops on ES before, or just drops based on news or whatever it may be. And when that happens, if you get stop limit, you may not hit your stop. You may get stuck in. You could get liquidated on your position or whatever it may be. That's a big issue there. But again, if you're knowledgeable, and I don't recommend trading if you're not knowledgeable on whatever subject. For instance, I don't recommend getting into options if you don't understand how an option works, right? That's just ridiculous. So the next thing, though, the biggest issue, because I come from trading futures and commodities specifically. When I was in studying finance at U of H, that's what I did when I consider it down in the trenches, right? I was just starting, just making any money that I had, right? I was living and breathing school, work, and then doing futures. But futures, if you really look at what you're doing here, you have to understand the time aspect of it, because there's 6 major times you're looking at throughout the day. So for a 5-minute example on ES, I'm going to just show you right now your big levels. So one is going to be around this time right here. This is going to be I believe right here is your Asia Open. And then you're also going to have, and again, stay with me for a second. So going into about right here, which coincidentally, right here, this is your London Open. And then you have your obvious coming down into 8:30 right here. You have your New York Open. Okay. So the biggest thing here is to realize is that these are your main times of movement on the market, specifically with indexes. And why? Well, obviously, they just highlighted them. That's when the market opens here. I don't know what time Asia closes. I could be wrong on that one. So I'm not positive on what time Asia closes. But I know London, which is the Europe market, closes at around 10 o'clock or 10:30, which is coming up right now, which is why you typically see a reversal or some slowdown around this time. So you're going to have a London close right here. And then obviously, you're going to have your close of New York around this time right here. So this is going to be your New York close, and you have after hours as well right there. And then there's going to be another box for whenever Asia closes, right? I just don't know that time. It's just not as important as London's close, because it's not, I don't believe it's during market hours. So that's the big thing there. But you can see, look how spread out these times are. So for instance, Asia Open around 6 p.m. Central. London Open, 2:30 to 3 a.m. Central. America's Open, New York, around 8:39. So you can see the schedule here that I'd be trading or wanting to trade is very sporadic, because ultimately, if you know when the market's going to move, that's when you want to trade, in my opinion, right? So if I know the market's going to move the most, for instance, a lot of options traders, they're going to trade from 8:30. I know a ton of guys that just trade from 8:30 to 10:30 and they're done. That's all they trade. They're done. They might come back for power hour. That's it. And so that's like a 2 hour work day for them. And I'm not telling you that anyone can. I don't do that. I do not do that by any means. Some people, that's what they do, right? But if you're looking here on futures, you have about 6 big times that you got to be awake for to spot that liquidity, right? Because you're not going to be able to hold a position and just sleep on this. I mean, who's going to hold few $1,000 position overnight? You have to be awake for these times. So that's the big difference with futures is time. And obviously, it's going to go through Sunday night all the way through Friday evening. So you have to be able to answer for that demanding time that's going to be entailed with that. So that's the big thing there. And for me, I had to quit during college just because it was not manageable for me as far as my relationships, my family, and things like that. I just could not maintain it. And luckily, I got into options, and then that's where I ended up doing well. Also, too, I got into options at a great time during, 2018 to 2020. So I was very lucky during that time. But yeah, so to me, that's a big difference. Is obviously there's direct risk and then time periods. The time periods are the biggest things for me. I like having almost a set work time from 8:30 till around 3 o'clock. And some days I'll just get up and I'll leave the desk for 2 hours. Go to the gym, take some breaks because you're gonna have periods of there's just no volatility, no movement. I'll literally get up and leave the market for 2 hours at a time and then come back. Have alerts set. But that's the big thing there is you have to be awake for those times when you're trading futures, in my opinion, if you want to be a successful futures trader.
All right. Yeah, that pretty much sums it all up. And yeah, really, really great webinar. It's been a while, Tyler. So we'll have to, do more events with you. And
Yeah, I'm gonna try. I'm gonna try to map out a whole week of Bookmap, and just for the next one, that's really what I wanted to do, and I just the week wasn't great either. I had some of the screenshots of last week, and I was like, dude, this is just a terrible week. It's because we're going into the interest rate decision, but I want to map out a whole week, and I want to just go break down day by day of what I was looking at, just with notes from YouTube, so you can see in real time what I'm thinking, what I'm looking at, and how I'm breaking it down. So hopefully next time, I can do that for you guys.
Oh yeah, that'd be great. That's a great idea. I mean, it's kind of like a mini course, and that would be very, very helpful. This alone, I mean, like my God, and I just love the way you're using Bookmap too. Just zoomed out, you're just buyers and sellers and volume. Keep it really, really simple here. This isn't. You don't have to get too complex and get all confused about what's happening or where it's going, etc. It just you know exactly what you're looking for.
Yep.
Yeah.
I try to keep it and I recommend to everyone here, keep it as simple as possible. Because once you start, think about it from like a logical standpoint. If you have to look at 6 to 7 different indicators, including Bookmap, by the time you want to enter that trade, it's going to be, your entry point might be gone at that point. You know what I mean? So you have to kind of really keep it and again, have that plan. I just believe Bookmap really can narrow down having that plan specifically.
Yeah. Yeah. Thanks, Tyler. So, guys, if you like this, please give us a like here or subscribe to the channel. Tyler, I put your links into both YouTube and to Discord here, and you can reach out to Tyler for special deals also on Bookmap, and yeah, that's pretty much sums it all up. And we'll do another event with you soon.
Awesome. Sounds good. I appreciate it, Bruce.
Okay, thanks, Tyler. Take care, everybody.
Have a good one.
All right, bye-bye.